Geostrategy.com.
Hello and welcome to our look at the upcoming week of February 9th, and you can see that we have the economic calendar in front of you. Quite a bit going on right off the bat for Monday. We have German trade balance that of course should affect the euro and the DAX. After that we have Chinese CPI, which will affect pretty much the entire marketplace if it's completely off. A lot of times it'll be a risk on, risk off type of situation, so you'll see markets in general go up or down based upon that. You can see that the unemployment rate in Switzerland comes out. Probably not a major market mover, but the Swiss bank, of course, has been under scrutiny lately. Manufacturing production month over month coming out of the UK on Tuesday as well. That should move the FTSE as well as the British pound. The Aussie employment numbers come out on Wednesday. That could have an effect, obviously, on the Australian dollar. Then we have German CPI on Thursday. That is a DAX and Euro moving event. Industrial production out of Europe for the EU, of course, would move the euro itself. And going a little bit later in the session, we have core retail sales month over month. That is out of the United States. That should be a market moving event in the stock markets. Initial jobless claims, of course, can move the markets as well. Although, that being said, we did just have the employment figures, so it's probably not going to move the market that much. Retail sales month over month. That, of course, ties in with the core retail sales, so we'll see what that does with the indices. After that, really not a lot going on for Thursday. Friday comes in with German GDP quarter over quarter for the fourth quarter. That, of course, is a big event in the EU. It will move the DAX, obviously, as well as the euro. We have European GDP, as well as French and Spanish as well. So a lot of work to be done in the European Union on Friday. Michigan consumer expectation comes out during the very end of the session on Friday, the 13th, and could very well be ignored just simply because of the fact that we will have had quite a bit of exhaustion by that time of the day. You can see that the S&P 500 did go higher during the course of last week, and it stalled at the 2060 level. This is an area that has been resistive in the past as we continue to consolidate. So really, we would expect a little bit of a pullback early in the week, but eventually the buyers should probably come back in and at least make an attempt to break out. With the longer term uptrend, we are more apt to buy calls. So we are going to look at pullbacks as call buying opportunities this week. Looking at the euro dollar, you can see we fell again on Friday. It's just been a back and forth week. Looks like we're going to continue consolidating. We do think there's a downward bias. So we're looking at rallies as put buying opportunities. That's kind of pretty much all we've been doing over the last several months anyways. So we should continue, as this market will eventually try to hit the 110 handle. And finally, gold got absolutely pummeled during the session on Friday, but really we're starting to come into some support in this area. So a supportive candle is reason enough to start buying. That's what we're waiting on this week. We think gold will pump, but at this point in time, we have to wait for some type of reason to start buying. With that being said, we have looked at the upcoming week of February 9th in the markets.